Hello, this is Tom Cloud, and I'm bringing you an update with SRS Rocco report on what has transpired since the election and the sweeping win by Donald J. Trump last week to be the president-elect of the United States. I'm fortunate to have done this for 40 years and met a lot of great people around the world, and I can call on to get opinions. And yet, today, as I called and talked this morning to some of my friends in Europe, two in particular, it's kind of a mixed bag what they see coming on. First of all, we have to realize that Donald Trump became a billionaire several times over by debt, by taking debt and leverage. And certainly the way he looks at that is a track of success. And yet us people on the real conservative side look at it. We want a balanced budget, and hopefully these two can merge. But for the first year or two, you've got to know that the deficit is going to explode even higher than it has under Obama. We're going to see these $1 trillion plus budget deficits. You can't rebuild your military. You can't rebuild your infrastructure, update airports, improve the VA hospitals and administration, and not have a lag in money. So to get the velocity in this country, remember, velocity is very important. As money goes through a banking system, through the Federal Reserve requirements, money can turn about 8.5 times for each dollar if the economy is right and everything is perfect. But Steve and I do share one thing. We still think this world is deflating. When we looked at the 2015 GDP and saw a 6% contraction in 2015 for the world and hardly any growth in America, we looked at it knowing this is another train that has to be turned around, that won't turn around overnight. So it looked kind of funny when you have contracting prices and you have a deflationary trend, rising interest rates the past week, making mortgages go up and house prices go down, while everything else in your house is going up. Your tickets, your food, your electricity, all these things are rising in price, which are inflationary, while your house is deflating, and we're seeing people bailing out of the bond market like crazy as rates rise. So you look at all this and try to make sense out of it, while the stock market's been going up because Clinton got beat by Trump. So we see people thinking that immediately stocks are going to soar, and we don't see that at all. In fact, I expect still a strong drop in the stock market between now and the end of the year. And yet the prices, I make this on Monday morning, the 14th of November, stock prices are still rising on the news of Trump being the president-elect. So we look at this and say, how's it play into precious metals? Nothing fundamentally has changed whatsoever. Debts are still going to be high. We've got a new commander-in-chief coming on, and that should be good for it. But it's going to be great for metals. It's going to be great for commodities. Look around the world at what happened last week with copper and other trace elements, because we all figure that we're going to see growth in the world, and maybe not overall, but we're going to see it go from a 6% negative growth rate to at least going up some. So it's going to be good for it. You could see stocks rise for a while, metals tank for a while, and then see them change places. Now, one thing interesting in my conversation this morning in Europe is there was reported shortages last week by a few retailers, and while I couldn't confirm that either way, I was able to find out this morning that there is a lot of shortage in the commercial 100-ounce and 400-ounce bars in Europe. And even in the United States, I checked with suppliers last Friday, and we see that there's a shortage here, but there are some available. If you had an order for a 100-ounce or 400-ounce bar, I could fill it if it was delivered in the United States. But most of these that are asking for commercial bars are asking for delivery in London, which makes it expensive to send it from here to there, and you've got to factor all that into cost. But right now, we are looking for another great year in metals. But the big news of the last few days has been the rising dollar as interest rates have gone up, it has propped the dollar up, and yet the bond market's fallen nearly 5%. $500,000 last week's worth 5% less if you're still sitting in the bond market. So you've got to take all these things and look at them. But the metals, in my opinion, even with the dollar jumping tremendously and going all the way back and making up the 2.5% it lost, gold still sits today up 20%. This is unheard of. Gold up 20% and the dollar even. This is unheard of, because usually for every 1% the dollar goes down, gold goes up approximately 11%. And that's exactly what we had seen until the election last Tuesday and Wednesday. We now see the dollar up to 99.8 where it started the year, and gold still up 20%. So this is a good buy for us that are buying gold and silver, and certainly silver, if the economy does improve worldwide, the solar panels alone, and certainly all the electronics, is going to drive the price of silver up dramatically. We see some forecasters forecasting $20 plus silver by the end of the year, while silver's sitting at $17.20 as I make this tape. And once again, even at $17.20, silver's up right at 20% for the year. So we haven't changed our forecast on anything. Gold and silver should be purchased methodically at these price levels. And yes, I do think the dollar is going to go down next year. All this moving out of bonds and into short-term treasuries has driven the dollar up. It's taking the pressure off of the U.S. in selling their short-term bonds, in particular as the long-term bonds liquidate. And watch for more of the same as we go into 2017, that people are going to continue to liquidate our bonds, especially Japan and China are going to continue to move more and more of their $2.5 trillion treasury notes and treasury bonds into either treasury bills, which short-term interest rates help if they're going up, where it hurts treasury notes and treasury bonds that are 1 year to 30-year maturities. So hopefully this is not an answer to everything of the emails we're getting in from you, readers of SRS Rocco Report. You're following Steve, who's writing about what's going on in the oil business, what's going on in the commodity business, what's going on in a deflationary environment. And yet we believe all that, but we also look at what's going on in price inflation in food and other things that are in our daily living expenses. So the main thing is to stay the course. And if you're not investing in silver or gold right now, you need to get in. This is a gift to see the prices pull back, the gold back to $12.20 and silver back to $17.20 is a pure gift. And if any of you need to talk to us, you can reach us at 800-247-2812. That's 800-247-2812. And if you need help with a self-directed precious metals IRA, we can walk you through that and help you how to get the custodian, and we can serve as your broker and representative. But I would get that done. And most of you know about our cheapest storage program in America, on only 20 basis points for storage in one of the COMEX warehouses. So we're excited about that, and we've seen numerous, many millions of dollars move since we introduced this on SRS Rocco just a few months ago in the early summer. So this is where people are moving to get this kind of storage while it's available at this price. And we think we will have it available at this price for at least another year. So look at all that. Call us and ask us your questions. Get set for a roller coaster ride in stocks, in gold, in silver, in bonds. All of it's going to go up and down, and some of it fairly sharply as we move in and watch the Trump presidency start. But just remember, expect bigger deficits and a falling dollar when all this starts going through Congress and Senate. For right now, people are parking their money because of the uncertainty. Till next time, this is Tom Cloud signing out.